after the budget, they could be paying maybe double that amount or up to double that. So that's a huge impact. They don't really want loads of private landlords selling their properties. If that's what the government said, that's when it comes in. You can imagine hundreds of thousands of properties coming on the market, and that would probably cause a property market crash. You might think, if I sell this property, there's £100,000 going to come out, and I'm only going to pay maybe 24,000 at the moment in tax. In reality, so this could be an opportunity for you to use negotiation to get a lower price, and although they're getting less, they're going to pay less tax, and the rate they're going to pay is a much lower rate as well. But there's an opportunity literally for the next 4 weeks, probably for the next week, to find the secure deals and get them done before the budget happens. Hello and welcome to the Property Magic Podcast. And in this episode, I'm going to talk about what could happen in the budget at the end of October and the impact that's going to have on your property investing. And actually why this could be the best 4 weeks of this entire decade for you to secure some great deals. So listen very carefully. I do hope you're listening to this as they come out every Tuesday, because this is very timely information and a huge opportunity for you. So no one knows exactly what the Labour government are going to do in their budget. However, we expect there are going to be some tax increases. And obviously the Labour government want to try and tax the rich to give back to the poor. That's the whole idea. And so capital gains tax is one of the areas that many people believe we're going to see an increase in taxes. So capital gains tax is the tax we pay when we sell an asset. Could be a property, could be shares, and it's when the value's gone up, we have to pay some of that profit to the government. So let me give you an example. Let's say you bought a property for £100,000 20 years ago. In that 20 years, there's a good chance that property has doubled in value and then even doubled again from 100 to 200, then up to £400,000. So the capital gain is the difference between the value now, 400,000, and the original purchase price. That's a 300,000 gain. Now, you don't pay tax on all of that. There is a personal allowance, which is being diminished every year, by the way. And then there's also the buying and selling costs. And if you've done any capital improvements to that property, those costs also come out. But let's say after all those things, maybe there's £200,000 of profit left over. Okay, and that's the amount you pay tax on. Now, the current tax rate is based to your income tax rate. If you're a lower rate taxpayer, you pay 18%. If you're a higher rate taxpayer, currently capital gains tax is 24%. Now, interesting, on other assets, capital gains is just the same. The Conservative government actually made a change that property is seen as a different type of asset. Now, because the Conservative former government have laid the ground there, it'd be very easy for the Labour Party to say, well, if you sell an asset that's not your own home, second property, an investment property, they're going to increase the amount of capital gains tax you might pay. Now, what will that go up to? Well, some people have said it might go up to the same as income tax, 40% is the high rate, or even the top rate, 45%. Or maybe it might go to 40% because that's the same rate as inheritance tax. But the point is that if someone has a property now that they were to sell and they're a higher rate taxpayer, they're going to be paying 24% on that capital gain. After the budget, they could be paying maybe double that amount or up to double that. So that's a huge impact. Now, when the budget happens, they normally will do one of two things. They can sometimes say, right, changes are immediate effect, or they might say there's a certain date in which these come in. Now, sometimes when these kind of changes are made, they say, well, this is going to come in the new tax year, which is obviously April 2025. However, I very much doubt they are going to do that, because imagine this scenario. You've got lots and lots of private landlords, about 2 million private landlords in the UK, and let's say just 5% of those are considering selling up, getting out the game. And you always have some people coming into the industry, some people exiting the industry. But let's say 5% have said, right, that's it, I've had enough. All the new legislation changes, I'm going to sell my properties. And some of those people might have one property, some of them might have 20 properties. So it could be hundreds and hundreds of thousands of properties we're talking about here. And if those people think, right, if I sell my property before April 25, if that's what the government said, that's when it comes in, you can imagine hundreds of thousands of properties coming on the market, and that would probably cause a property market crash. Now, some might say, well, that's good, it brings prices down, makes them more affordable, but I really don't think the government want to do that. So I very much doubt they'll say it's going to happen in April 25. I think they'll either say it's with immediate effect, Or they might say any properties that has exchanged, they've got 30 days to complete, because normally you exchange and actually complete a week later because you pull the finance down, or you can exchange and have a 30-day completion, or you can do exchange and have a 2-year completion if you want. I don't think they'll allow that. I think they'll want properties that have exchanged and complete within 30 days, or maybe by the 31st of December, something like that. Those ones will probably be on the former current rate, not the new rate that most would expect is going to come in. So I think that will stop the panic selling. I think the reason why the Labour government might want to do this is probably 3 reasons. First of all, obviously they need to raise tax, and this is seen as one way of raising tax. Secondly, taxing the rich is seen as a popular thing for the Labour government to do, and it doesn't affect the average man in the street, so they're going to keep the voters happy. And thirdly, the Labour government understand that there is a massive shortage of accommodation right now. They don't really want loads of private landlords selling their properties. And so if they increase the tax, it makes it less of an incentive for that landlord to sell that property if they're not really going to get anything out of the sale. Because one scenario you need to understand is, we talked earlier about somebody might buy a property 20 years ago for £100,000 and it's worth £400,000 now. Well, some people pay down their mortgages and maybe that property is completely unencumbered, there's no mortgage on it at all. But many landlords, particularly in the early part of their career, they will increase the borrowing, they'll refinance properties as the value go up, in order to take out equity to go and buy more properties. So at the beginning of a property journey, when you are building the portfolio, people often maximize the debt to give them as much money as possible to buy as many properties. And they might stay at that 70, 75% loan to value, or they might pay it down over time. But imagine this scenario. In the example we talked about before, maybe there's £200,000 of tax to pay, and maybe the value of the property is 400, but the mortgage is 75% at 300,000 because the owner has kept on remortgaging over time. Now, a lot of people think that the only tax they're going to pay is the difference between the value and the mortgage. In this case, a value of 400, a mortgage of 300, that's £100,000 of gain, they think, but they don't understand it's based on the original purchase price. So they might think, if I sell this property, there's £100,000 going to come out and I'm only going to pay maybe 24,000 at the moment in tax. In reality, if there's actually 200,000 of gain, they're going to pay more like 50,000. If the tax goes up to 40%, they'd pay more like 80,000 on that gain. So they're not going to get very much from the sale. So therefore, this might encourage some landlords, instead of selling up, to stay in the game and keep that property available for anyone to rent. So these are some of the reasons why I think the Labour government are going to bring this in. I would put money on the fact they're definitely going to raise the capital gains tax rate. So how can you use this to your advantage? Well, there is a window of opportunity. For the next month, the next 4 weeks literally, you could go out and find people who have got a property that they want to sell, and maybe they've been a landlord for a long time, they have a big capital gains tax liability, and they realise if they sell now, before the budget, they're probably going to be paying a lot less tax than if they sell after the budget. So this could be an opportunity for you to use negotiation to get a lower price. And although they're getting less, they're going to pay less tax, and the rate they're going to pay is a much lower rate as well. Or you could use what we call vendor finance. So this is where maybe someone has got a property they want to sell. They want to maximize the revenue. They don't really want to sell at a discount. They don't have any mortgage on it at all. And they want to sell it quickly because there is going to be some capital gains they're going to have to pay, and they'd rather pay the current rate rather than a much higher rate after the budget. So we could find those people and say, look, we could buy the property from you before the budget, we get it all completed, if you help me buy the property. And what I mean by that is, rather than you going to get a traditional mortgage from a mortgage company, in fact, what you could do is say, well, maybe the owner of the property could become the bank. Maybe they could lend the money to you. Now, why would they do this? Well, first of all, you agree a full purchase price rather than selling at a discount. Secondly, it can be done very, very quickly and thus be affected by the current rate of capital gains, not a future higher rate. And also, if they don't need the money, And if it's a landlord who's selling up properties, they might have sold a few of the last couple of years, they've probably got money in the bank. They don't need the money, they're just going to put it in the bank. They just don't want the property. Well, maybe they can lend you the money and the rate you could pay there might be 5 or 6%, which is about the same as a mortgage. But the whole point is it's more than they would get in the bank. So they get the maximum price for the property, the full market value, instead of having to discount. They pay less tax, and because you haven't actually given them the money yet, you owe them the money, they're going to get a much higher return on that money than they would get if they just put the money in the bank. Now, when they sell, there will be some capital gains to be paid. And if they've got money in the bank earning just a couple of percent, they might want to use that money to pay the capital gains tax and lend you all of the money to buy the property. Or maybe you need to give them a little bit of cash. So you might put some money in to cover the tax they need to pay, but it's probably not going to be as much as the 25% you would normally put in. And instead of having to apply for a normal mortgage, you'll use this vendor finance. Now, obviously, you have to work quickly. This has to be done through solicitors who understand this and can move quickly and get all the searches done that you need to do. But there's an opportunity literally for the next 4 weeks, probably for the next week, to find the secure deals and get them done before the budget happens. And I wanted to share this with you because, when these opportunities come up, if you're quick and you use speed of implementation and you know what to do, there's always huge opportunities. When everyone else is panicking and worrying about what could happen, there's always a silver lining if you know how to look for it. And I like to think if you're a subscriber to this podcast, whenever these opportunities come up, I like to share them with you. So I encourage you to listen to this podcast again, think about how you can implement this, get out there, look for properties maybe where the owner's had it a long time, they don't have a mortgage, they don't really need the money. Maybe vendor finance secured before the end of October could be a great way for you to acquire your next property using very little of your own money. I hope this has been useful. I'm going to put a link in the description about some further training about this. You might want to click on that and find out how you could actually work with me to actually secure your next property before the budget. So click on the link to find out more. I do hope you enjoyed the podcast. As ever, I encourage you to invest with knowledge, invest with skill. Now, if you're watching the video version of this, obviously, you should definitely subscribe to the channel and hit the bell icon to make sure you're notified anytime a timely video like this comes out. And also, it would be great if you could like the video and put a comment, say, what do you think is going to happen to capital gains tax? And can you see the opportunity we have for the next 4 weeks? So come and comment, I'll answer as many of those as I possibly can. As ever, I encourage you to invest with knowledge, invest with skill.